Welcome to your podcast.
Thank you.
So, would you mind giving us and everybody that's watching us a brief introduction of yourself?
Sure. So my name is Dinesh Kumar. I'm from Hyderabad actually, and as of now, I'm working in Bangalore. I've been in markets for the last 8 years. When I was in Delhi University, I studied in Sriram College of Commerce. So there, I found passion in stock markets, and that's how I got into this industry.
So, tell us about Valuable Insights. When did it start? How did it start?
Yeah. So basically, we started off this when we got license from as a RA. So as a research analyst, I got my license in July of 24.
Okay.
After that, we were thinking about something unique and stuff, and we thought Valuable will be the perfect name.
So, you said you had to get a license of being a research analyst. What license are we talking about?
So basically, to get registered as a research analyst, basically there is a process from SEBI, Securities and Exchange Board of India. So basically, what they do is, they have a process, basically work experience of 5 years at least, and then your degree in graduation in commerce background, and then
that's a compulsory thing for you to have.
Definitely.
Okay.
You need to have certain criteria. Basically, is certain net worth and stuff. Certain things are there. Once you fulfill the criteria, then definitely there will be an exam for RA, module 15 of research analyst. So once you clear that, it will take at least 3 to 4 months process, and then you get the license.
Right. So all humanities people and science people are just not qualified to become research analysts.
No, it's not like that. There are some exceptions where engineers also have become research analysts, but there is a lot of criteria behind that, basically. So it's more like flexible for people who are into finance background.
So you've started Valuable, like, let's say a year ago.
That's right. Technically 8 to 9 months.
Right. And you've been in the market for?
I've been in markets for almost 8 years as of now. Yeah.
Oh, how? I'm assuming you're not over 30.
No, I'm 28 actually. So when I was in 19 and 20, something somewhere in between. When I was in Delhi University, when I was studying in my college, there I had few friends who were in markets. And once I overheard their conversation when they were talking about stocks, why may Reliance liya, why may Tata liya. I was just thinking, what are they talking about? Because till then, even though I was in commerce background, I was not aware much about things. Then that day, it made me look, what am I doing? And that day, randomly, I don't know how, but I happened to watch Wolf of Wall Street movie of Leonardo DiCaprio. So that was something which was a game changer for me. I liked that movie a lot, and it's not because of how the movie is made, but because of the the character, the way he has done, and it was very inspirational for me. So I wanted to do something in this, and it got me here today. Yeah.
So how did you follow up after watching that movie? Because obviously I watched the movie.
Yeah.
And if you ask me, can you invest properly? I cannot. My portfolio looks red.
Right. Okay.
And I do not know how the stock markets
Most
work.
of the people's portfolios are red right now. So that's totally fair enough.
So how did you go about learning the stock market?
Yeah. So like I said, that was a time which made me interested in markets. It was in 2015, technically 2015. So that was something which started off, but 2016 and 17 period was where I hooked up with markets. So then I started doing research in morning 6 o'clock. I used to wake up, see Asian markets and all, and start off the day. Used to read a lot of money control forums and all, and news and all. So that way, it's called like jigyasa, that interest, that was built within. And then once that started, it was like very interesting. Every day something new happens in market. Stock goes up, down. These things, it create some energy within. Like you get right, you feel so happy. You get wrong, you feel disappointed. So that's how it is, profit and loss type. So that was something really interesting for me, and that got.
Right. So when we talk about the stock market, right, like it on the face of it looks very complicated.
Right.
So would you say having a bunch of friends that were already into investing or into the market helped you understand markets a little better?
Definitely. So basically, when I started off, I had one of my friends who was already into markets, and his dad was a really good investor into markets. So when he used to say, I made this much money in this stock, that much money in this stock, I was really curious how he was able to make money, whereas most people say they lose money in market and stuff. That's when I understood it's the real money is in investing, and if you're investing in a stock, it should not be like, I hold it for 6 months or so and expect it to do miracles. That won't happen, because markets and economy and global factors, everything is interlinked.
Okay.
So we have to think about everything basically. Right now, nothing is in our control. Tomorrow a war happens, or there is a tariff from Trump or anything. Basically everything has an impact on markets only, and on stocks also. So basically it's like, you ride a boat, you sail the boat for a long run basically. That's when the real results are. And when you're trading, basically you want early results, and you want to make quick bucks. That's where people tend to lose the momentum in trading and stuff.
See, redirecting back to what you said, like how you said when your friend used to say, okay, my dad made this much money in this stock, he bought this stock and he made so much of profit. But the stories when you hear, the stories of losses, of people getting bankrupt, people losing their lives,
that's right,
are so much higher than people that have made like so much money that they've sailed their
100%.
life through, right? So as a kid that was around 19, 20 per se, did that never feel like, okay, this is too much of a risk for me to get in? Like, didn't you want something more stable?
Yeah, that's a very nice question actually. So basically when I started off, one thing was clear from childhood. Only thing was like, get into the best college, get a placement, get a job, stable job, go 9 to 5. That was never my thing basically, and I was always a risk taker basically. It's like more like I wanted to do something freelancing also, but it should be something which makes me happy at the end. And I was very much passionate to do something on my own always. So that's when me and one of my friend, okay, when he started off a company, I was part of it basically.
Okay.
So as a friend, I was helping him, being an intern at the same time, being the person who can support his startup. So that's where I actually learned about markets. And since they had a franchise with one of the broker, so that got me real time experience when I was very young. So when I saw people losing money, people gaining money, it was more like the equation never matched.
Okay.
It was like it was always, even today nothing changed basically, because people's mindset, the psychology behind trading, and the way how it functions, it's always the same basically. Like people's mindset, for example, even if it's 10 years back or coming 10 years after, the greed and fear factor, that will never go from one's control. So basically why it's always been 90% losing and 10% winning. It's always because of their own way of looking at it basically. Early gains into pockets kind of thing. There are very less people who wait for the good opportunities over a period of time. That's where people tend to lose big money, and that really caught me in the start. But then when I thought about it, I thought definitely, like in scam 1992, risk hai to ishq hai, yeah. So that was something which I had it basically. That was something, let's try it. I mean, we burn, yeah, definitely. I mean, even I lost money in the markets when I started off. Even today I make some mistakes. That's part of trading. Definitely it's nothing like you excel in stock markets or something, because ultimately market is supreme. We have to respect that. Yeah.
So, like you said, right? Like people look for short-term gains, and you said no, you'll have to row the boat like for a longer period of time for you to see results and all of it.
Yeah.
But let's say, someone's just looking to invest for like a small period of time, make a few quick rupees,
right?
Like a little bit profit and get out. Is that possible?
So see, that's what I mean. If you really want to do that, you have to start trading basically. When you do trading, if at all, for example, like a very simple example I'll tell you. There is someone who is offering you every day 10 rupees, okay, and one fine day he offers you 20, okay. Say we'll take it this way. Your dad is giving you every day 10 rupees for 10 days, and from 11th day he started giving you 25 rupees or 30 rupees or 50 rupees, for instance. Slowly, when you start seeing that money, and one fine day if your dad comes and gives you 10 rupees again, will you be happy?
No, I wouldn't, because I have seen a little more
Definitely.
money.
That's how the market operates. So small money is good to an extent. Some people say, I just feel like definitely that's a big joke, because people say daily I'll make 500 rupees, 1000 rupees for entire year, and my wealth will compound and stuff. See, logically speaking, we are not robots, okay. We run on emotions.
Once I was having a conversation with a friend, right, like a couple of years ago, and he trades. He's into day trading, and I asked him like, bro, like I also want to learn trading. Like, could you teach me how to trade, or like tell me where do I have to learn it from?
Mhm.
And he told me something that day. He said, Hima, trading isn't just about your knowledge. It's more emotional. And I don't know how to transcribe that emotion for you.
Right.
So, do you agree with the statement that trading and investment is emotional?
Definitely. Because, for a fact, trading involves money. Where money is involved, definitely that, emotional swing will be there. The highs and lows. So basically, when it comes to stock market, it's not the way, it's not like, that complex also. It can be very simple as well, where even if you say, for example, invest a K 1000 or 2000 also, you will have that greed and fear within, because that money what you made now, that is what you invested is hard earned money, definitely. So you will have that anxiety. What is my money doing? Is it performing well? Am I losing that? So that kind of in that kind of situation, basically you will start making mistakes. And emotional psychology is very big part in trading, basically trading and investing. So to understand stock markets, though it's a bit complex, if you make it simplified way, it's a simple marketplace where buying and selling happens, and it's more like a business, basically, where you expect profits, and you want to do you want to take some returns out of it, just like a shopkeeper who's expecting some profits. Yeah.
So, when you start trading, now let's just say you faced losses over losses over losses. Like you said, it's emotional, right? At a point, you'll feel like, bro, I'm just losing money here. So, why do I put more money when I'm just losing money? Have you ever been in a situation like that?
Definitely. I mean, when you lose money, you you feel the hell is falling on you, and you start getting more anxious, and you start adding more capital. You take loan from somebody, or you take your pocket money and invest more money into stocks, and you start doing all those things when you have that thing where you have to recover your loss. Basically, people, why they do this is because the moment they lose money, okay, they want to recover somehow by hook or crook. They want to add funds, they want to recover the money. And when they get into that, when they focus on recovery, more losses will happen. That is because they'll not stop where they started. When they would have started, it would have been more like, I want to make 500 rupees a day, 1000 rupees a day, or something like that. But the moment even they see, say, 10,000 rupees in a day, say their losses were 50,000 in the market before, they'll not be happy. They want to recover. In that process, they keep adding and they keep losing. That's why 90% people lose money in the markets.
Right. So, if today I had to learn trading and I'm still confused.
Right.
But I'm someone that can read books, I can sit and read.
Perfect.
So would you give me 2 or 3 books that a beginner could study and understand markets?
Definitely. When I started off, I had these huge crushes on books. I had 3 books which were my all-time favorite, and I have got them actually. So it is called The Disciplined Trader.
Okay.
This was written by Mark Douglas. This tells you about the psychology of trading, what one needs to build as a character in trading, because ultimately psychology and discipline trading is the key in trading, because you will understand your risk reward, you will understand your market risk appetite and all, and then you take the trades. So this is something which is very important. As a trader, it will build a mindset. And then this is called Market Wizards by Jack D. Swagger. In this book, there are interviews by top traders who made good money in the markets. So this is something which I highly recommend, and this will show your passion that you can do beyond your limit also. And there is one more called Trading in the Zone. This is again by Mark Douglas. This is a very nice book, okay, where it builds psychology about trading emotions, the greed and fear, where you need to stop, where you need to start again, where it's not like you just have to sail every day. You can take a break and you can start again. So that is something which this book also tells. So these are 3 books which I highly recommend, and if you are starting off, you can take them and you can start off today itself.
Oh, my parents would love it. Anything that says discipline, my parents will love and start doing. Definitely. That's you are not disciplined.
So in trading, discipline is ultimate. It's like you should be so religious in trading. You start off trading, your only thing should be, I will do disciplined trading, I will follow stop loss, I will follow risk management. These are things which you need to do day in, day out. Even though if it's hard, boring, you hit the gym, you do the same thing regularly, still people will ask, Arey, won't you feel bored? To athletes like Virat Kohli, if you ask, won't you feel bored of doing workouts and all? It's more like, it's within, it's like you do it religiously to become better person. So these books will help you to do that.
Right. Thanks for giving these. Also, other which ways. So, like, what do you think, is there like a minimum age criteria that someone should have surpassed to start trading?
See, basically, for trading, there is no age limit. I mean, once you have a demat account, say after 18, once you have a demat
Okay,
account,
so 18 is the limit.
18 is the limit. And once you can invest basically on kids' accounts also. Basically, there is a joint account of family, Hindu undivided family thing. And there also you can invest on your kid's name. Even you can say, for example, okay, you have you have a son or a daughter. Okay, you can invest, even on their name into mutual funds. SBI, there is a mutual fund for that. You can invest in that also. So there are a lot of platforms where, right from very young age, you can start investing for the future generations. But yeah, that is the thing.
So what's the difference between trading and investing like?
See, it's more like, say for example, you went to a fruit market, vegetable market. You got apples worth say 200 rupees. You gave the money, you took the apples and you came back home. Here, just a simple transaction happened of buying and selling.
Right.
So consider this as trading, where the retailers do regular trading. Okay, in trading also there are different types. I'll explain you that. But before that, coming to investing. In investing, it's more like, you are growing a farm from the very beginning. Okay, you're putting in water, you're growing the plant, and then you're nurturing it, and then the plant grows. So this is a process. Basically, it takes a lot of time. In investing, it's all about patience. It's all about seeing the hard times also, because sometimes bad weather, crop can be having a bad situation and stuff. So all these things, when you face ups and downs of market cycles, then you get the fruit in the end. So in investing, you hold it for a long period of time, you wait patiently, and ultimately investors make more money over traders, because we end up paying more money in brokerages and commissions only. Yeah.
So which of these two has like a higher risk factor? Is it trading or investing?
100% trading, because trading involves risk management, involves disciplined trading, which most traders lack. And that is something which is not easy as well, because building a mindset, building a character in trading is something which is really, really hard. Not everybody can be successful in trading. If somebody is watching, somebody's profits and stuff, and they're entering markets, isne itna banaya, usne utna banaya, and you want to make money out of it, that is definitely not going to happen. And ultimate thing is, you need to understand your risk management. Somebody is showing off like, I made 10 lakh rupees, and he's putting a very nice BGM and stuff, and you get excited. That's not how it operates. The right trader, the one who is actually trading, will never show off that way. Basically, it's more like, he understands profits and losses are part of trading, and he respects both, because he'll understand where he went wrong and where he went right, and what can be corrected. So that is, the equilibrium in trading.
You said it builds character, right? So
Definitely.
Starting off on a lighter foot, do you have like a favorite character that you look up to?
Definitely. See, basically, when I started off, from my early age, I was a huge fan of Sylvester Stallone. Was the very famous Rocky Balboa. So that was something, an underdog boxer who goes on to become a champion. That was very inspirational for me, and you can see the tattoo also. This is from Rocky, and it's keep moving forward. It's more like, when I was in my early age, like when I started off trading and stuff, this was something which used to motivate me. There are two songs which hook me up always. That is, one is Eye of the Tiger and Burning Heart. These are the two songs from Rocky series, and I always hear them and get inspired. And apart from that, there is one more character, and which I hugely admire also. That is Leonardo DiCaprio. I've been a huge fan of him from the start, and his movies, especially Wolf of Wall Street, that was something which got me into markets, because when I saw that movie for the very first time, I thought, what is this? I mean, it was more like adult content movie and nothing else. But then when I started watching it again and again, I would have watched more than 100 times. Man.
Did you watch it for that, or did you?
No, I watched it, the key scenes, basically. It's more like key scenes,
Where Margot Robbie is there.
No, it's more like, the scenes where DiCaprio wants to do something in life, the sales call, let it be, or the way money doesn't just buy you a better food, better life, better car, but also makes you a better person.
We can see you've seen it more than 100 times.
Yeah, so that thing, it really caught me. And when he says stock market is something which is the ultimate thing, okay, and which is where all the money is there, and they say money never sleeps. And stock markets you have all day, be it Indian markets, US markets, anything, you can watch any market, and that really gets you exciting. And about movies, this was something which always got me engaged into it. And there is another movie called Margin Call, and there is another movie called Wall Street. So these are movies which got me really energetic and really passionate into this world of stock markets.
Has there been a day in 8 years? This can be a conversation with a client, this can be a conversation you've had with yourself, or an instance that you experienced that made you feel like this was the right choice. Sahi kiya maine.
Definitely. I mean, see, ultimately, in anybody's life, I don't know how many twists and turns will be there. But in traders' life, every day twists and turns will be there, because in a trader or in an investor, when you see the markets, there is something new every day. Okay, because the markets, basically the stock markets, runs on past performance. Okay, what happened in the past will repeat itself. The history repeats itself.
Right.
So that is what is the psychology behind trading also. When you see stock markets, any stock, for example, which phone do you use?
I have an iPhone.
Okay, so you use Apple. Apple is a stock, right? So basically, in Apple also, there will be daily ups and downs in stock market, in Wall Street, basically. Okay, it trades in New York Exchange. So that uncertainty, the ups and downs in stock market, basically that is because of the price and behavior of the investors and retailers, basically. The way it is reacting, how people are taking it, basically the supply and demand. If for example there is a bad news in Apple, the product is not going so well, immediately it starts falling because behavior of people, they start panicking. Here there are two things in psychology, basically in trading: buy on news, sell on rumor. So this is a very old saying in stock market, and this is something which is real as well in a trader's life. These are two things which are very important, be it greed or fear. Both the things should be in control. If you want to be a disciplined trader, you start reading these books. At the same time, there are certain things which you have to follow as well. One is journaling. What mistakes you're doing, what is going on in your trading journal, where you went wrong, where you went right, everything you need to write down every day, because every day market is new. Okay, though market runs on history, there is always a new chapter coming, that new resistance breaking, that new support breaking, anything can happen in market. So always we have to be ready. Okay, say for instance today markets have fell 1,000 points. As per technical analysis, okay, next day it should be gap down only. It should fall even more because it has broken important levels.
Right.
But what generally happens right now is, even then there is some positive news, immediately markets go up. So it's more like you have to understand the psychology of the market. You have to have the experience to and the knackness to understand what and how people are reacting in markets.
So when you say journal your mistakes, right? See, sometimes you analyze a stock or how a company is performing in the market, and you buy something.
Fair enough.
And let's say over a period of time, whatever was your ideal investment time, your wait period was there, and you face a loss. So how do you know that, okay, this was the mistake I did, which I should have analyzed?
Exactly. So to do that only you have to do journaling. I mean, for instance, today you made a mistake, you have written it down. You will remember that.
So what's a mistake? Like, can you give me an example of?
Sure. So mistake is more like, you're not following the basic things. Basically like not following stop loss, not trading with proper psychology, proper risk management, not having proper position sizing, because all these things are equally important in trading. Because coming to stop loss, okay, if you don't have a stop loss, it's more like, you are going to blow your account one day or the other. That is certain to happen. And stop loss is just like a Lakshman Rekha in trading. It saves you from losses, okay, and it makes you a better trader. You accept your mistake, you accept the loss, you will be at a better place. If you don't accept your mistake and you overtrade, or you just hold it, or you average the position. Average, I mean, you are wrong. Okay, you got it at 100. It came to 50. I'm talking about options. It came to 50. And you want to average and get it to 75. the median. Okay, but what generally happens, it comes to 20. Okay, and again you average it,
Right.
and it will come to somewhere around 40. Say it becomes zero, because options run on time value. Okay, with time the premiums decay. Delta, theta, gamma, basically the theory runs on time value. Okay, once the time comes closer, it will go off. People just hold it. In the end it will become zero. So they lose money because of stop loss hunting. They don't follow stop loss. Second thing is risk management. Okay, for instance, I'm expecting 20 rupees as a return, and I'm putting 50 rupees at risk. That is 1:2.
And more.
Yeah, exactly. So if you, what ideally, if you're a trader on a regular basis, your risk management should be at least 1:2 or 1:3. Okay, say you have a 20 rupees stop loss, you have 60 rupees target, or at least a 50 rupees target, something like that.
The whole concept of market per se, like, it's filled with people that have like boatloads of money.
Definitely.
Right. So as someone that want to start out, let's say you're a student, or you're somebody that's in like the early stages of your career,
Right.
you're still trying to build something stable for yourself. But having understood the economy today, the way the lifestyles we aspire to
Fair
have,
enough.
everybody wants to invest, everybody
100%.
wants to learn trading. So do you think there's like a certain minimum capital that you should have to trade, or like?
So how much do you have in your pocket?
I don't know, like, okay, 500.
Sure, give it to me. So you can even start investing with this 500 rupees. I'll tell you how. Okay, you just have to open a demat account. Okay, you just have to open a demat account, and with this 500 rupees, you can. I'm sure. What would you do with this 500 rupees in general?
I'd go for a coffee, like
coffee, right? A Starbucks coffee or something. Rather, you can buy a Starbucks share. That's expensive though. But for instance, in India, basically with 500 rupees, you can get 2 shares of Zomato. I think if you order a biryani, it will cost at least 400 rupees or something. But if you just invest in stock markets, as minimum as 500, you can get 2 shares of Zomato, or 1 share of ITC. Okay, or anything for that matter. There are many shares under 500 which you can get, and at the same time, this is something where you can invest even in gold, silver, and other commodities also with just 500
with
rupees.
gold being at 1
1
lakh
lakh,
something,
yes.
you're telling me like I can invest 500 rupees?
Definitely. So there is something called gold ETF.
Okay.
And there is something called gold Bs also. Okay.
What is a gold ETF?
Gold ETF is exchange traded funds, basically.
Okay.
So they invest in the index, basically. Okay. So basically, you can, with this 500 rupees, you can invest in all 50 stocks of Nifty as well. That is, for instance, say there are some mutual fund houses where they, for example, Motilal. Okay, they invest into a mutual fund of Nifty 50. You can directly put this 500 into that mutual fund, and you can invest your money. You don't have to necessarily buy all the stocks. So if this mutual fund performs, mutual fund will perform when the market goes up. Okay, so ideally, even if you're investing in one stock, or if you're investing all together at one place, it doesn't make much difference. So ideally, you can invest in mutual funds with that kind of money, even with 500 rupees, and you can buy 2 shares, 3 shares of Tata Steel as well in this. So
no, now you're just making me guilty of getting my coffee.
No, it's more like there is always this saying where say 20 years back, I would have got MRF shares, say for example at 2,000 rupees or something. Today it's around 1.5 lakh.
Yes.
Okay. So there is always a guilty factor in stock markets. Okay. Ultimately, that is always there, but you can take a change today. You can make that difference today, because investing in the right stocks, like in Scam 1992, Harshad Mehta told before. Okay, Harshad Mehta told, invest in India. Okay, if you invest in India in the right stocks, definitely you can make really good money over the years, because we are a growing economy. Okay, coming to technology, or coming to new way of building innovative stuff, India is always ahead. And investing in the right stocks, like water stocks related to water, pharma sector, or EV, electric vehicle sector, or say AI sector, into artificial intelligence or semiconductors, these are all future for the stock markets. And you can, if you want, we can make a list of it, and we can share to our viewers also in coming days.
I think that'd be lovely.
Definitely. And so yeah, that's the value of 500 rupees.
So now I shouldn't be drinking my coffee.
No, you can, but start saving some money. That will save you. Yeah.
Fair, no, yeah, that makes sense. Maybe I do drink a lot of coffee. Okay, so like, see, all that sounds really appealing, right?
Mhm.
But for someone that doesn't know how to read the market, or see, I cannot start off today and expect profits.
Fair
So
enough.
like, at least for me, like, it'd be lovely if someone could like teach me where to invest, how to invest, when to
Definitely.
stop.
Mhm.
So I think that's the work you do, right?
100%. Yeah, we research.
So if our viewers want to start their
Mhm.
journey with investment or trading,
Right.
how do they contact you? How do they avail your services?
Yeah, firstly, I'll tell you the margin requirements basically. See, coming to equity investing, you can start off with as minimum as 500 to 1000 also, like I said. But whereas if you're doing options trading, okay, you need at least 20 to 25,000 or maybe even more, maybe 50,000 also. So that is a minimum requirement because you can, have proper risk management and strategy as well. But coming to futures, you at least need a lakh rupees, wherein you can say, for example, if you want to buy Reliance future, you need at least 1.5 lakh to, just buy one lot of futures. So that way, based on your, investing, how much you want to invest. Based on that, you can choose a, theme into which you want to invest. And apart from that, coming to reaching out to us, our link is in the bio, and you get all the stock market recommendations there. And we have our premium services for our clients as well. Our major motto is to give the best to our customers. So only we research in every which way, be it macro aspects or micro aspects, fundamentally, technically. With my experience in the markets for the last 8 years, I've understood one thing. No matter how much best you do, sometimes losses, profits are part of trading. But ultimate thing is discipline. I always encourage to follow certain rules. That is trading with stop loss, and entry and exit should be the most important thing. And trailing stop loss, like I said, trailing stop loss is simple. Like you can, for instance, you got it at 100 rupees, a stock at 100, okay, and it went to 120, okay, and our target is say 130 rupees. You just say stop loss is at 90, you keep the stop loss at 115. This is called trailing stop loss, okay, wherein you at least lock some part of profits and don't wait for the target or the stop loss to hit.
Right.
So trailing stop loss will help you to book at least decent amount of profits. Or you can say, for example, you got two lots, you can book one lot at 115 or 120 and wait for the other with stop loss. That's one ultimate thing. Yeah.
Someone that doesn't have an idea of what kind of investment is ideal for them, or
Right.
like they don't know if they want to invest in equity, if they want to invest in options or futures, or so will you give this sort of consultations to people before they can avail your premium services as to like?
Definitely. So there is a Telegram channel. Okay, it's called Valuable Insights. Valuable Insights.
Okay,
So you
that
get
is
the
VALUEBULL.
That's right.
Right.
So there you get all the stock recommendations. Okay, and if you are someone who wanted the one-to-one consultation, you can always avail our premium services. We will help you one-on-one to enter, exit, each and everything. So here you get the right knowledge, right awareness also. And as an analyst for the last 8 years, I'll help you to take the right decisions. And no matter profit or loss, we'll ensure disciplined trading is done, and you will become a better trader yourself.
So end-to-end consultation is
Definitely,
given from your
definitely.
side. Okay, thank you so much. That was
Thank
for
you.
this episode.
Thank you. It was a lovely session. Thank you.
Thank you.